Okay, hi there. Welcome to test 20 in our MCQ The Edge in A-Level Economics series. And in this final test in the 2018 series, we're going to ask 15 questions on macroeconomics. As always, at the end of each question, take a moment to think about the answer by pressing the pause button and then just press play when you want to go through the answer and some of the reasoning behind it. Good luck with these 15 questions. Here's the first one. The UK exports mass market cars to Germany, and Germany exports mass market cars to the UK. Which combination of factors helps to explain this pattern of trade? Have a go, please, at question 1. So the answer to question 1, have we got it right, is C. Now, this is essentially a question about something called intra-industry trade. We often see particularly advanced countries exporting and importing similar products to each other. It could be TV screens and motor cars and washing machines exported across borders. One of the reasons is that consumers have a willingness and ability to pay for differentiation. They like choice, different specifications of vehicle, for example. And the mass market aspect hints at economies of scale, doesn't it? That German car producers are on a scale of production that allows them to export their surplus production to other countries, including the UK, and vice versa. Question number 2. A country's central bank is charged by the government with setting interest rates with a view to meeting a given inflation target. And here's the question. What will increase the likelihood that it will decide to raise interest rates? Have a go, please, at question number 2. So, what do you think here? Central bank, when will it start to tighten monetary policy, increase interest rates? It's likely to be when the rate of inflationary pressure is increasing. And therefore, the correct answer to question 2 is B, a decrease in the household savings ratio. It's not A, an appreciation of the currency puts downward pressure on price. Imports become cheaper. A higher trend growth rate mentioned in C would actually allow higher levels of GDP without inflation. Therefore, central bank will be more likely to keep interest rates low. And likewise, an increasing inflation target means they don't have to raise interest rates to meet the target. So it's B, quick chain of reasoning. When there's a fall in the savings ratio, that implies a higher level of consumer spending. That can feed through to an increase in aggregate demand, which could then cause the economy to move into a positive output gap. Central bank might choose that as the moment to start raising interest rates in a bid to just put a lid on demand pull inflationary pressure. Let's move over to question 3. What is the opportunity cost to society of an increase in unemployment? Have a go, please, at question number 3. So what's the social cost to the economy as a whole of an increase in unemployment? The right answer is B. The reason is that unemployment is a waste of scarce resources. It's a deadweight loss of resources, in fact. The hours that the unemployed could have worked cannot be recovered. And unemployment means the economy is operating well within its production possibility frontier. It's allocatively inefficient. And the cost to society is the output of goods and services that those people who are out of work might have produced. Question 4. If the marginal propensity to consume in a given period becomes greater than unity means 1, what must this mean? Take a moment to answer question number 4. So what do we think for 4? The MPC has gone up and it's above 1. The right answer is D. The marginal propensity to save must be negative. A lot of people, when we ask this question, choose A. That would be where the average propensity to consume is greater than 1, rather than the marginal. But out of disposable income, the marginal propensity to consume plus the marginal propensity to save always equals 1. Therefore, just rearranging, the marginal propensity to save, MPS is 1 minus the MPC. We're told the MPC is greater than 1, therefore the MPS must be negative. Typically, this is when people, for example, borrow money to increase their spending above and beyond any gain in income, and that's called dissaving. Question 5 is about the circular flow. A macro question about the circular flow. Which row, A, B, C or D, correctly identifies net leakages? Net leakages from the circular flow of income. Here's your chance to have a go at question number 5. So a net leakage is where the leakage is greater than the injection. What did you get for question 5? The right answer is D. So a net leakage is where the leakage is greater than the injection of demand in the circular flow model. A trade surplus is a net injection of demand, exports greater than imports. A budget deficit is also a net injection. Government spending is higher than taxation. But if people are saving more than businesses and others are investing, that's a net leakage from the circular flow. So the answer there is D. We're 1/3 through our final edge session. Let's crack on with question 6. And this is a lovely question. It's about the Lorenz curve. Hopefully you're familiar with this. Curve X in the diagram is an economist's initial Lorenz curve. Now, which combination of policy changes could cause the Lorenz curve to shift from X to Y? You need to think this one through. Have a go, please, at question 6. And the right answer to question 6 is B. It looks as if the curve has shifted down for lower income groups. They're getting less income cumulatively at the bottom on the left-hand side there. And that will be, of course, in part explained by a fall in the basic state pension. The pension is, for many people, a key source of income, particularly for lower income households. On the other hand, the income going to the top 2 deciles or so has fallen. There's less income going to that group, which suggests that the rate of income tax at the top end, the higher marginal rate, has gone up. Just very quickly here, you can see that the share of income following the change in the curve from X to Y for the top, let's say the top decile, has shrunk a little bit, suggesting that the income tax system has become more progressive. Question 7 tests and checks your understanding of the theory of trade. The diagram shows the amounts of wheat and clothing that can be produced in countries X and Y with a given quantity of resources. What does the diagram indicate about the production of these 2 commodities, wheat and clothing? Have a go, please, at question number 7. So X lies below Y, but the gradients are different. So it's about a question about working out the absolute and comparative advantage. My advice in the exam is just to work through A, B, C, D systematically, ticking off whether you think it's right or wrong. That's the way to do it, because there's a lot of text here. The right answer is C. Let's go through this process together. Country X has an absolute advantage in clothing. No, it can't produce as much as Y, so that's wrong. Country X has a comparative advantage in wheat. No, X is closer to Y in clothing. It's 9/10 as good at clothing. It's only 6/10 as good at producing wheat. Country Y has an absolute advantage in clothing. Yes, it can produce more clothing than X. Full stop. Country Y has a comparative advantage in both commodities. No, only in one. If the gradients differ, then X will have an advantage in clothing and Y a comparative advantage in wheat. So in this example, Y has the comparative advantage in wheat production, X in clothing, but overall Y has the absolute advantage. Its PPF lies further out than for X. Question 8 is a data question, and it relates to the chart. The chart shows the annual percentage change in consumer prices and average earnings, including bonuses. That's basically wages and bonuses in the labour market. Now the inflation chart is in light green. The average earnings data is in dark green. Okay. Which one of the statements referring to the data in the chart is correct? Have a go, please, at question 8. Again, I would work through this systematically. Let's do this as a group. Did real earnings increase during 2016? Well, in fact, consumer price inflation was above earnings. So the answer there is no. Did the general price level fall during 2009? Well, the rate of inflation was falling, for sure. The light green line shows that. But it was still positive. So the price level was increasing, albeit at a slower rate. Sorry, I'll go back to A in a second. Go back to A. Did real earnings increase during 2016? So the green line showing earnings is above the inflation line. So real earnings did increase during 2016. So the answer is A. The general price level didn't fall. It continued to rise, albeit at a slower rate. Real earnings higher at the end of 2014 than 2010. Again, across the piece there, 2010, the green line has been below that of the inflation line. So real earnings were falling from 2010 to 2014. Did the Bank of England keep inflation to within their 2% target within the period shown? Or 2% plus or minus 1%? No, inflation spiked above 4 or 5%, didn't it, on a couple of occasions? So the right answer is A. Apologies for that slight confusion. The real earnings change is the change in average earnings minus the rate of inflation. Question number 9. A fair trade scheme encourages consumers in developed countries to buy food items produced by cooperatives in low-income countries at a higher price than charged by commercial firms. On what grounds could it be argued that this fair trade scheme might be maybe harmful to economic development? What do we think for question number 9? Well, fair trade, of course, is a scheme that's used by many people. Millions of consumers in the UK buy fair trade products. To what extent might it be harmful to the overall development in lower income countries? The right answer is C. It may slow the process of diversification. Fair trade improves farmer income as they're getting a better price for their product. In that sense, they're getting increased producer surplus. But one side effect is that more resources will flow into existing farm industries, fair trade industries, whereas you could make a case for saying that what lower and low middle income countries need to do is diversify away from just growing food to perhaps processing, manufacturing, branding, and other related activities, as well as new industries. Question 10 is a calculation question. The statistics in the table below relate to an economy's labour market. What is the economy's unemployment rate? Percentage figure rounded to the nearest decimal point. Calculate, please, the unemployment rate for this country in question 10. Have a go. And the answer to question 10 is A, 6%. The key to this is to ignore the third bit of data there. A number of people who have working age and not working, out of work, but who are not looking for a job, they're not counted as the unemployed. The unemployment rate is the unemployment level, 2.4 million, divided by the labour force. Now, the labour force is those people in work plus the unemployed. So add the two top bits together, the labour force is 40 million, unemployment is 2.4 million divided by 40, and you get an unemployment rate of 6.0%, which is A. Another data question for you for question 11. 5 questions to go. The chart below shows an index of GDP per hour worked in 2016 for a selection of countries, including the UK, shown there in a nice shade of green. Which one of the following statements can be correctly inferred from the data? Have a go, please, at question 11. So this is an index of GDP per hour worked. Effectively, it's to do with what's called the productivity gap in the UK. The fact that the UK productivity is quite a bit lower than many of our major trading rivals. The right answer to 11 is D. 2016 productivity in the UK was more than 10% higher than Japan. It is, and if you think about the data here, the index of the UK is 100. That's the base for the index. The index of our GDP per hour worked in Japan is about 87, 88, but certainly 12, 13% lower than the UK. So it's D. It's not A, because of course this is GDP per hour worked rather than total GDP. We'd need to know how many hours were worked, for example, to be able to work out the level of GDP. And the other two answers are wrong as well. Question 12 is about the balance of payments. The chart below shows the annual current account balance for the UK economy between the years 2007 and 2016. Again, similar question. What can be correctly inferred from the data? Here's your chance to have a go at question 12. So the figures look pretty negative, don't they? But this is the current account balance. The right answer is C for question 12. C. Since 2011, there has been a significant large deterioration in UK net investment income. Net investment income is the income from overseas assets, and that appears on the primary income account in grey. And it went from surplus, small surplus in 2010, 2011, and we've had 5 years so far, and probably more to come, of negative net investment income, more money flowing out on the investment income account than is flowing in. Some students choose A, and if they do that, they're confusing the external debt associated with the current account to the government debt associated with a budget deficit. So the net investment income is the primary income balance moving from surplus to deficit after 2011. Wow, we've got 3 questions left. Here we go, question 13. The table below shows fiscal balances for a selection of advanced countries, 4 countries. In 2016 and 2017, which country experienced the biggest net improvement in their fiscal balance, measured as a share of GDP between the 2 years? Is it Brazil, Germany, Spain, or the UK? Have a go at question 13. And the right answer, if you've worked this one out, is C, it's Spain. So you're looking for the net improvement in the fiscal balance. Brazil had the biggest budget deficit. That came down by 0.8%, so an improvement of 0.8. Germany has a budget surplus. That went up, but it went up by 0.3% of GDP. Spain has a large budget deficit. That came down by 1.3%. It's an improvement of 1.3%. And the UK deficit came down as well, but again, an improvement of 1%. So Spain had the biggest net improvement. Statistics show that in April 2017, average weekly earnings were highest for full-time workers living in London, £655, and the lowest in Yorkshire and the Humber, Northern Ireland and the North East, all just over £500 per week. What's the most likely explanation for these differences? Well, in London, which one of those options do you think is the best explanation? Have a go at question 14. So this is our penultimate question. The right answer is B. London has a higher percentage of jobs that offer above average salaries. The unemployment rate in London is actually higher than the rest of the UK. It's not an actual explanation. The minimum wage actually is higher in London, again, than in other countries. The sort of living wage is higher in London. There are fewer part-time workers available. Well, high commuting costs affects both part-time and full-time workers, as we know. Now, the key is that the pattern of employment in London is different, particularly with financial services, business and legal services, for example. There are a higher percentage of people in jobs that pay above the median or above the mean wage or the mean salary. Here we go. It's question 15, the last question in this test, the last question in our 20 Edge series. Here we go. Having fallen below $30 per barrel in 2013, the price of oil, Brent crude oil, reached $70 per barrel in January 2018 for the first time in 3 years. The UK is a net importer of oil and gas. One can infer from this information that, other things remaining the same, the change in crude oil prices mentioned will lead in the UK economy to what happening? Well, it's either A, B, C or D. I'll give you a clue there. What do we think is going to happen to A, D and AS if there's a hefty rise in oil prices and the UK is a net importer of oil? Have a go at question 15. So what do we think for the last question? The correct answer is A. Oil, of course, has gone up in price. We're importing oil, so the value of oil imports will have increased. UK is a net importer. Balance of trade in oil will worsen. That's going to cause a fall in aggregate demand because of a rise in oil imports. The other side, aggregate supply will shift to the left because many industries, many sectors, transports, logistics, the energy industry use oil as an input. If the cost goes up, the aggregate supply curve will shift to the left, in the short run at least. Wow, there we go. I hope you got a good score on this test. I hope a good range of questions for you across different topics. Thanks for joining in the Edge in A-Level Economics Revision webinar series. Loads more videos, topic videos, exam technique help on our YouTube site and also on tutor2u.net, the main landing page for the economics section.